certainly the entire global economy has been affected by what seemed to have been started in the United States, or at least partially started in the United States, the Great Recession, which was predicated on a housing boom and housing bust. And on the heels of the housing bust, which we lost about $8 trillion of housing wealth almost overnight, which is an incredible amount of wealth, complete wealth destruction. Then you had the financial problems that ensued after that. You had the Wall Street problems and the decline, the massive decline in the stock market in the United States. This spread throughout the world. And one of the ways that it spread isn't just the interconnectedness, but the idea that we had all these mortgage-backed securities from the home mortgages that blew up. They were packaged and sold all over the world, and so that certainly helped to spread the economic malaise throughout the world.
It was the case in Europe. It was the case in Japan, and in both cases, it's still the main type of employment, but more and more you have people with unstable, precarious type of work, and the labor protection should take care of these people, and it's another challenge, and there is again no miraculous solution, but we need thinking and we need innovation and new ideas, fresh ideas.
There's been a collapse of aggregate demand. Aggregate demand, so economic growth has become negative. That has caused a general drop in labour demand, which has influenced young people particularly. It's influenced some people in some countries particularly severely, and those countries are the countries which have the most flexible labour markets. So the UK, Finland, also Italy, also in some countries, also like Italy and Spain, where there is a very strong protection for, let's say, permanent workers, adult workers, a very weak protection for new entrants to the labour market, which is basically young people. So there are two strands. Basically, the more flexible the labour market, the worse things have been for young people during the recession.
In the face of the crisis, the German government actually spent a lot of money trying to prevent job losses, trying to maintain employment. Germany was one of the countries that emerged fastest from the recession. As a result, its tax income was maintained. It didn't have to spend a lot extra on benefits for unemployed and so on. And so its level of debt has actually gone down in the 2 years since 2010. In Britain, where they imposed austerity, where there were large numbers of job losses, tax income has fallen. Expenditure on maintaining the unemployed has gone up. And the debt ratio in Britain has increased over those 2 years and is now bigger than in Germany.
Public policy has to play a role. It can play that both on the demand side in terms of creating demand for employment for youth, as well as it can help increase the supply of youth to the labor market with appropriate skills. So let me just say a word about each. On the demand side, it is very important, apart from financial incentives provided to employers to hire young people, to also think about the kind of innovation that employers need to create jobs that could employ skills of the youth. Young people are generally lacking in experience, but they are certainly can be better trained in the latest skills in their field. So a recent graduate of a computer programming course or an agriculture course is more likely to know the latest techniques than someone who graduated 10 years ago. So what we need to push is the kind of innovation where employers will be introducing new products, new innovations, new processes that need current knowledge. And if that is their need, then they would be more interested in hiring young people. We also need public policy intervention in creating closer connections between our educational institutions and the job market.
The policy in the U.S. that could help fix unemployment for youth and for older workers is what I would think should have been done about probably 3 years ago now. And that would be what I would call the New Deal, which is that government spending to directly create jobs to get the economy going. Basically Keynesian stimulus, much larger than we actually had in the stimulus program for the American Recovery Investment Act. I think that would have helped stimulate the U.S. economy if we would have invested three years ago, and we wouldn't have the problems that we have now. Things would start to get better. Instead, we're kind of at the bottom, and we're staying at the bottom. So things are improving very little and very slowly. In the rest of the world, I'm not so sure, because I feel like, especially in the European Union, you have a single currency now, obviously the euro, but you have all these different countries with many different problems, and you don't have a common institution that binds you. For instance, the United States, all the individual states, we have a common binding institution, which is that we're America, we're the United States of America. So I think that makes it much more difficult for instance, the European Union to fix some of these problems.
We all agree that training is a sine qua non condition. It means that it's a necessary condition, but you will not necessarily get a job because you have the training. But to have a good job, training is essential. So the question is how to improve the training capacities of the states. And the institutions of training are very different from one country to the other. I would say it's essential when you can afford it. It's essential why? Because if you give some family benefits to the parents, they will be able or more able to pay for the studies of their children, or to compensate the loss of the wages of the children or the teenagers, let us say. And for the adult themselves to be able to be trained or retrained, not going to work, is essential from time to time. But they will only do it if they have the money to do it. So social security is, I think, essential. The question is how to develop a system of social security in countries which are lacking financial resources.
Good thing to do in this during the recession is to increase, for example, the minimum school leaving age, so encourage educational participation. That's good, partly because there's very low opportunity cost, because the alternative are not great there for young people. It's quite easy to do that, to increase educational participation, which should have an effect on the long term. It won't resolve problems in the short term, but it will have an effect in the long term. In terms of shorter term measures like active labour market programs, these can be useful. Also providing some income support and some entry level into employment for young people. I mean, they tend to be most useful when they're connected to subsidized employment with private employers. So the active labour market programs which seem to be best for young people seem to be those which involve some training, particularly on-the-job training, and also some subsidized employment with private employers.
Investment in human capital has got to be a part of this. In the United States, for instance, the cost of college tuition is going through the roof. It's increased enormously just over the last 2 or 3 years because of state budgets having to balance their budgets, so they're cutting investments in education, which basically means they're cutting investments in people, in people and their education, in primary school and in secondary school. So in the United States and elsewhere, we can't let this economic downturn be an excuse to forget about an entire generation of young people. But that does seem to be what's happening in some places, and I think that's going to, in the future, in 10 years and 20 years, we're going to see the outcome of this decline in investment in young, not just investment in young, but the opportunities that the young do not have because of this global downturn. And this is going to be playing out in generations to come. And so that's yet to be seen, but I just can't see at this point how that's going to be any good news.
The question is money for training. And in all countries, not only in developing countries, money is limited. And the main question, and the more disturbing question, is that should we invest more for the training of everyone, or to train more the best people? And especially in developing countries, if you train the best, you can compete with industrialized countries. So, and it's in fact the solution taken by all the emerging countries. You look at India, you look at China, you look at Brazil, they have trained the best, considering that they will bring with them everyone up. It's one option. The other option is to try to give a minimum to everyone. And it's a terrible dilemma for any government, I would say.
And that, I think, is the big task, to fit things together in a way to get below the surface and to say, what are the social processes involved? What are the patterns of social relationship? How far are there common elements which for analytical purposes can be made more significant than the differences?
Okay, well, my take on that is that, okay, so you have basically two states, two fairly good states, if you like, being in education and being in work. Okay? And the school-to-work transition is how you move from point A, education, to being in work as smoothly as possible. Now, that usually is taken to apply to make as short as possible this transition period. But actually, what is really important is actually to make that match good between education and work. So also to not just to make it as short as possible, but also to make appropriate match. So if a young person who comes out of education finds a job which is appropriate to their skills and preparation up to that point. Now that may mean waiting a bit longer for employment. It may mean a bit longer unemployment, but in the end, if the job is better as a result, or the match is better between the individual and the thing, then I think it's worthwhile. But essentially, the school-to-work transition is simply the movement from education to work, and the idea being that everybody more or less ends up in work, and everybody starts from education.
We generally refer to what is called industry-shared approaches to training and education. And some of the obvious things we have done for a long time, these are things like internships and job shadowing, mentoring, coaching, and so forth. But more recently, there are new techniques that have been developed essentially to create joint projects. In other words, you create projects which can be funded privately or publicly, but that allow young people who are still at college or school to work on projects which are in the industry. So that way you bring the two closer together. There are some programs that allow colleges and universities to market their new knowledge. For example, if something is coming out in a laboratory or some new computer program has been developed in the university, to find a market for them. And that also creates more opportunities for young people.
Thank you. University of Bergamo. Grazie.